Traders, I hope this video is not too long. I'm going to try to keep it around 20 minutes. But I got a lot of little thoughts in my mind that I want to mention here. Basically, we had a short squeeze, taking us all the way back up to the all-time highs in the markets. So wouldn't you know it, we're all-time out of the woods. I mean, everything's a-okay. Everything going on with the viruses in China, everything's hunky-dory, right? Well, I'm not in that camp necessarily, but what's going on here is we got a massive stimulus out of China, which is driving this market to higher levels. It's nothing like central bank manipulation to keep things going to the upside, and that's kind of the driving force for these markets, in my opinion. So basically, we got this fib fan and this massive consolidation uptrend in the markets. So basically, during this whole phase of the market in the uptrend, this is the time when you buy and hold to the long side. Okay, that's the type of positioning that you take on in these markets, and you can reap some really big benefits along the way. Well, now even with this massive pop, with all these gaps on the S&Ps right below us, we did not get back into that primary uptrend. We are in an entirely different trading environment. And as I've said in my other videos, basically we have gapped up above January OPEX. So what does that tell you guys? Does anybody realize what's going on here? Basically, we had a transition out of massive growth, and the big money was not prepared for a massive sell-off. And now we've had a pop up above the OPEX. So all those road calls, which they've been doing month after month after month after month, they had the opportunity to liquidate out of their road call positions, or at least a large position of them up here. So that's a bearish take of what just happened, in my opinion, on these markets. That basically we just came up just enough so big money could liquidate out their road called positions for a near break-even positioning. So, and that's what I'm, and you see this typically in a major transition from a strong bullish market into a liquidation market. So just keep that in mind. That is really what I'm expecting here on these markets, and I'm expecting a down week coming ahead. So just keep that in mind here. I could be dead wrong, but that's what I'm looking at here for these markets. So if anything, and plus also keep 4 weeks in a row we've blown out our market maker move on the S&Ps, and so, and not only on top of that, here we are, range highs, all-time highs in these markets, and excuse me, and this is some serious resistance up here with that dotted line. Based on my charting, we got some serious resistance, and we have range contraction on our options this week. They had like 80-point spread last week. Now we're only looking at 50-point spread up or down on the S&Ps on the options. So they're implying a tighter range after we've blown out the ranges for 4 weeks in a row. So it's a scenario that it just screams danger to me all over the place. When you have 4 weeks in a row, you've blown out the ranges, and now all of a sudden you're going to have range contraction the next week. It doesn't make much sense to me whatsoever. So, lots of risk, in my opinion. Okay. See, I can't even find my stop button. Let's see here. Qs, major resistance. We're right into right here, right now on the Qs. And actually, I'm going to title this, it is a tech sell-off imminent. And that is going to be my topic for this week, because I think we are on the verge of some money rotating out of technology. We have that's just 3 days in a row now that we're bumping our head on serious resistance in the Qs, and I do think there's very strong reasoning to think that we are going to see, at the very least, a short-term sell-off in the technology. So just keep that in mind going forward here. And then we're also already seeing underperformance in the Russell It's can't even hold the 2020 Open on the Russell, and lots of weakness here. And anybody who rode those IWM Russell calls, they're pretty much they're still way underwater here, and not much of a chance for that to happen. But the similar situation on the Qs, they bounced it up. Where's that purple line at? I don't see it. I must have erased it. But yeah, we roll back here right around this area. So anybody in the Qs, they've had an opportunity to take some profits off their Qs here. So they're in a really good spot to do that because it did come down below the OPEX, January OPEX, and now they have gotten a second chance to do so. But so far, the Qs are showing relative strength versus the rest of the market. And then we have diamonds, and there's a chance that Boeing's going to come out, the FAA is going to come out this week, and in a month, we're going to start test flights for the Max to re-enter the to start flying again. In that case, the diamonds are going to go to the moon. I mean, Boeing is going to really be a driving force. But we are trading right above. Well, it's acting as support right now, but it's just a serious resistance area above the primary trend. Okay, so just keep that in mind that we're right on the verge. It looks like a reversal topping pattern here on our candles, daily candles, potentially rolling back over on our diamonds in an overbought situation above trading range highs. So yeah, so just keep that in mind, the situation we got going on with the diamonds, because that whole Boeing thing, that's fluid. It could not materialize like I'm expecting. And so basically, if the FAA does come out and recertify Boeing, and which is a big if, yeah, Boeing's going to be taken off. I mean, we could probably see 370 by the end of the week on Boeing, quite easily in that situation. But I'm not so sure that's going to be the case. For that reason, and seeing what was setting up, I did have just a really small Boeing call position going into next week, and I did close that out Friday. I did not want to be taking swing longs with the knowing the volatility situation that we have for a weekend session. And I could be wrong. Maybe we gap up Monday, but I'm thinking we're going to gap down Monday. So keep that in mind and on your watch. Okay. Reason I think that things are going to roll over. Apple came up, tagged a significant resistance, in my opinion, for Apple. This would be the logical place. We see this uptrend line. We have crossed out past that, and we're up here running into the 20 SMA. We're coming right down to that on the daily here. There's a decent chance that we could see a little bit of responsive profit taking up here. I'm not expecting a big move flush lower, but there is a chance that Apple is topping out here. Microsoft, which is a major tech winner, topped out Friday, hit my resistance area in a very accelerated uptrend line. So it taking a little bit of breather makes sense. Netflix, I have it. It came up Friday, or came up, and it has tested an untested monthly Virgin point of control, and it's backing off now. So I'm thinking Netflix is actually topped out, and we might start seeing some. And the earnings weren't that great on Netflix, so I'm thinking this is a potential topping for situation for Netflix. Facebook numbers were pretty sucky. Into resistance here. It went right up into that Friday. Potentially coming back off that now, in my opinion, considering we have had such weak numbers out of Facebook. Google, I didn't draw that one out. Wait 1 second here, and I'll try to find that. Google, which had some crappy, what I consider some crappy earnings, it is in some resistance here, not quite as relevant as the others, but we do have a channel high here it's also running into. So this is another one I think it's going to face some headwinds going forward here. The main thing that I look for to see where we're going from here, XLF, we managed to rally back up to the break even for 2020, and we're stalling out here on our XLF. And in that regard, if this was such a bullish market, why is it that the 10-year it's yielding 1.59%, the 2 years yielding 1.58%? We're only 1/10 of 1% difference between the two, and basically a flat yield curve on versus the 10 and the 2 year. So this is a dangerous little situation. Has everybody put on too much protection for this coronavirus thing, and they're going to start rolling the protection off? Well, that would be a driving force to the upside. But they are really a lot of fear out there right now, and they are not wanting to take that protection off. And we are threatening going and inverting the yield curve again this week. Our VX futures are heightened and just not coming back too fast with all the fear going on here with the virus situation. So keep that in mind. I think the heightened volatility also just realizing the heightened trading range that we're in right now, but on all three of the indices, the S&Ps, the Qs, and the IWM have all passed out of the rapid ascent phase of the market, the move higher in the markets the past 3 months. Your 10-year bonds holding up here right near the highs. The market's caught a nice short squeeze, but the bonds are not giving it up so far. So just keep that in mind. Bonds are just keeping a sustained bid here for some reason. And it doesn't look like anytime soon that virus is going to be over with. Now, granted, China supposedly is going to be opening their markets, or people are going back to work Monday. So that might be a driving force for the markets. We will see. But I'd say a lot of businesses, even if they can go back to work, they may not be opening their stores. So just keep that in mind too. And I do want to point out, I had mentioned in multiple videos, I still thought we were going to come up here and test this VPOC, which it's already been tested once, so it's not as vital for a test. But I was actually mentioning that a few days ago, and we never did do it. There is that chance right there for that. Okay, and then we have our XLP. That's our defensive. Whoops, 1 second here. XLP. This is our consumer staples. They are not giving much of anything back on our consumer staples. This is our defensive area in the stock market, so that people go here to hide until things settle down in the markets. And that's pretty much what's going on here. We're getting a justification. XLU is another one that they go to hide in. And, it's just kind of just going sideways here. Despite the massive run-up in the markets, they're not taking money back out of the utilities yet. So whatever money has rotated out of the more speculative areas in the market, or the technologies, the growth area, the growth engines of the market, most of that money is parked over here in safety right now for potential moves higher. So just keep that in mind. The markets are factoring in a lot more risk going forward, and so just keep that in mind in your trading strategies. So just keep in mind, last week we put in 2 poor structures. We gapped twice last week in the overnight session, and we have not resolved lower to fill these gaps. So keep that in mind, that we're probably definitely going to fill this upper gap, and possibly even come down and testing this other gap this week on the best side. And that is within our, just coming down, that's still within side of our market maker expected move, which, like I said, we've had 4 weeks in a row busting outside of it. So the markets are not efficient at all. And we have compressed option premium or expected moves this week. So they're not expecting a big surprise move to the downside this week. And that's normally when situations like this happen, whenever, that's exactly the scenario that I think has set up here going forward, that they were going to break this market maker move. Not necessarily just a big all out, you know, fall on your face sell off, but I don't. We've already had 4 weeks in a row. I just think it's going to happen again. So keep that in mind going forward. That if the technology does manage to hold up, it's going to have to be from different areas like Amazon. Amazon is pushing at had a closing price above my critical resistance area on Amazon. So this one is showing some relative strength going into Friday's close for a potential push higher. But this is multi-year consolidation situation on Amazon. And if the markets do get a sell signal, I mean this thing can fall on its face pretty easily with the rest of the tech and everything. So keep that in mind. And the big one for this week would be Cisco's reporting. And look what they did on last earnings. They just got demolished on their last earnings. And they have a large exposure in China too. So just keep that in mind going forward here, that as far as tech goes, the big headliner for this week is Cisco, which could have quite a drag on the index. Okay. So that's just a few of the things that I wanted to point out here, that a lot of risk going forward this week. And of course, everybody wants to talk Tesla, and I'll finish off with that. It's managing to hold in there on Tesla, this upper trend line. I kind of think it's going to break it and come down here and back test the. There's a gap down here at the 6. Well, I go down and lower. It went up so fast you have to go in lower time frames just to see the thing. There's a gap down here at 674, I think. I think we're going to be opening below this uptrend line come Monday, and it's going. That's whenever it's going to start coming down and trying to back test this gap. And I do think it's a viable long at the right price. I just don't think we've hit that price yet. Okay, that's just some of the stuff I'm talking about. I hate to be a little bit more bearish than most people, but I'm just giving you an idea of what I'm seeing here. I think we're starting rotation out of technology. I think all the techs have kind of topped out here, and we are going to see at least a few weeks here that money's going to start coming out of the technology space and following the Russell, showing a little bit relative weakness with the Russell. Okay. Thanks a lot, and I'm probably the first person out there to talk about rotation out of technology in a very long time. But that's that's what I'm seeing, and mainly because everything's hitting my target upsides. I think the markets wanted to push up into targeted upsides, which I think they've all achieved. Now's the time that we're going to see correlation to the downside. Okay, bye, and like it if you like it. Leave comments. I like seeing people's comments below and learning from your input and stuff. And be sure and follow me and stuff. Thanks a lot.